Morning. Top Gun here, Monday, March 15th, little after 2 a.m. Pacific Standard Time. This is the YouTube pre-market commentary number 2. We already covered what happened on Friday, where we had an 11 basis points jump in the 10-year Treasury, but stocks pretty much shrugged it off after a morning sell-off, rallying after the first hour all the way into the close. We talked about the effect of rising rates on real estate, which nobody's really been talking about. We're talking about the effect on growth stocks, but real estate is actually a bigger source of wealth for our country than financial assets. And real estate is even more interest rate sensitive than stocks are. So very important. And then I also talked about how 36 of 56 companies in Cathie Wood's ARKK innovation ETF are unprofitable in their last fiscal years. Okay, now in part 2, we're going to preview 3 significant earnings reports coming up this week. Now, there's not a lot of significant earnings reports this week. We're well past the heart of fourth quarter earnings season, and we're almost upon first quarter earnings season. Nevertheless, Coupa, Nike, and FedEx are all going to report this week, starting with Coupa on Tuesday afternoon. Now, Coupa is a cloud-based business spending platform based here in San Mateo, California, just a few miles to the north of where I am right now. It's got a $20.5 billion market cap, and when they reported earnings on December 7th, 2020, they gave full year guidance of revenue between 523 and 524 million, and non-GAAP diluted EPS of between 47 and 49 cents. Okay, and Coupa's stock closed Friday at 277.51. So if we do the math and we take the midpoint of those guidance ranges, we get a current price to revenue ratio of 39 times and a current price to EPS ratio of 578 times. So this stock clearly falls into what I've been calling speculative growth, the kind of stuff that's in Cathie Wood's portfolio. And that kind of stock has been out of favor with rising interest rates because so much of their earnings are in the future that rising interest rates means you have to discount them at a higher rate and they're worth less. And Coupa is down about 25% in the last 3 weeks. So what we want to pay attention to is the reaction to Coupa earnings. Okay? Are people still are investors going to still sell these stocks? As they did not last week, but the previous 3 weeks. Last week was the bounce. Or are we now, buying these stocks again, and growth is resuming its leadership, which would invalidate my thesis that the market is topping. All right, turning to Nike, which reports on Thursday afternoon and is a much bigger company with a market cap of $220 billion. They don't provide guidance, so what you have to do then is you look at past earnings. So if we look at the third quarter, the second quarter of 2020, and the fourth quarter of 2019, because the first quarter was devastated for Nike by COVID, we get EPS of $4.19. Now the stock closed Friday at $140.45. So we have a trailing price to earnings ratio of 33 times. So this is quite expensive. Nike is what I call a reopened value stock. It's the category that people are rotating into from mega cap growth and speculative growth. The financials, the industrials, all the stocks that are poised to benefit from an economic reopening that everybody is sure is going to lead to a full recovery. And that shows up in the valuation of Nike. So let's see, again, the reaction to Nike's report. Are investors going to continue to push these names up regardless of already sky-high valuations? Okay, finally, let's turn to FedEx earnings. I got lost here a little bit. All right, here we go. So FedEx has a $73 billion market cap. Very, very important company. And if you exclude the COVID quarter, they earned $14.74 in the previous 4 quarters. The stock closed at $270.20 on Friday, so we get a trailing multiple of 18 times. It's actually pretty reasonable, especially for this market. It's tougher to categorize FedEx because they were a pandemic beneficiary as consumers all turned to online shopping, and so they had to use FedEx, and those companies like Amazon have to use FedEx and UPS to ship the goods. But the reopening will help their business deliveries. So it's just an important stock. I can't really categorize it to give it greater to help us give us greater insight into the market, but it is one that I will be watching. All right, that's it for today. I will see you guys tomorrow morning.